Reserve Bank of India will be launching a pilot of the retail digital rupee tomorrow. What exactly is a digital rupee? That's what we're going to try and explain to you this evening. So starting tomorrow, the RBI will be rolling out the digital rupee. Think of it as the RBI's official cryptocurrency. Just like Bitcoin or Ethereum, it is represented by a digital token. The only difference, the e-rupee will come in the same denominations as the paper currency. Plus, it is legal tender in India, which means just like your coins and paper notes, it's backed and guaranteed by the Reserve Bank of India. Now, the first stage of this rollout is a pilot scheme, sort of like a trial run. It will be limited to 4 cities. That's Mumbai, New Delhi, Bengaluru and Bhubaneswar. 4 banks in these cities will be part of the rollout. That's the State Bank of India, ICICI Bank, Yes Bank and IDFC Bank. Only these 4 banks in these 4 cities are part of the pilot phase. If it goes well, the RBI is planning to expand the e-rupee rollout countrywide and will include more banks and more cities. Now, on to the biggest question. How does the e-rupee work? In simple words, through digital wallets. The 4 participating banks will store your digital rupee in electronic form. You will also get a QR code linked to that wallet. Just scan them and you can send or receive the e-rupees. In the pilot phase, you can transact with other users as well as merchants. I know it sounds a lot like UPI payments. In fact, that's a common query many people have. How is the e-rupee different from Google Pay or Paytm or any UPI-backed payment? When you transfer funds via UPI, that transaction is backed by hard cash in the system. Say you send 10 rupees to your friend. Somewhere in your bank or with the RBI, that 10 rupees is stored as hard cash. You're merely using technology to transfer that cash. That's not the case with digital rupee. The e-rupee only exists in digital form. It does not have a paper or metal equivalent. But why is the RBI trying to digitize Indian currency? For starters, you can save a lot of money on printing and managing hard currencies. Plus, the digital currency will help foster financial inclusion. It'll increase efficiency. It's based on the blockchain technology, which is what cryptos are based on. And it is the RBI's way of giving an alternative to that crypto craze. Ajit Khurana, founder of Reflexical, is joining us now on the show to explain to this why this is important and will this really bring change. Ajit, great to have you on the show. Let's start by very simply talking about whether this will be a game changer. Will people go in for this? Because the point is right. It sounds a lot like UPI. What's the difference?
So what is interesting is that while you talked about people are wondering how this is different from UPI, but despite your explanation, which was of course correct, the fact is still that question persists. Because pre-UPI, Google Pay, Amazon Pay and Paytm would allow you to have wallets where you would load with your own money and then use it, which is exactly what is happening here. So what is the big deal and why are we making such a big deal about it? The fact is that what is being launched tomorrow is a kindergarten version of what we expect the digital rupee to become. So tomorrow's digital rupee, and I say this in all seriousness, is less friendly to use than UPI is. Because UPI is one step. Here you have to load your money and then transfer and the other guy has to unload it onto their bank account. What is so earth-shaking about this is that this is just one step of probably infinite steps, right? So which means, for example, this allows dumb digital money, which could merely be transferred, to become intelligent digital money eventually, which means money which is programmed, money which auto-deducts a TDS, money which automatically settles escrows without intervention. So that is the future that we are looking at.
Explain this part again. Ajit, let's go over this part again. Because right now, the e-rupee that I will load in my digital wallet is based on actual money that I have in my bank account, right? It's not coming from thin air. So you're saying I have to actually go one step further, one extra step to use e-rupees. Sure. It will be available in lesser places. How is that going to make me want to use this? Why would I want to use it?
You are right. See, tomorrow's step is quite straightforward. That if I have in one of those 4 banks, and then there are 4 more in certain locations. If I have a digital wallet for this digital rupee, I'll just call it crypto rupee because rupee was available in certain other digital formats earlier. So the crypto rupee, I will have to, from my bank account, transfer money to this crypto rupee. Now I can use this crypto rupee to whoever is willing to transact it with me through QR code or address or whatever. Then when I want to get it back to my bank account, it is once again transmitting back to my bank account. So what is coming tomorrow is just a pilot which sees, can these rupees be generated at the point where the customer wants them to be generated, and can they move around and go back and settle again. So this part is not the convenience part. UPI is more convenient than this. But what it will become later is why we are all going gaga over it.
So let's come to the point of what it will become later and compare it with why cryptos became so popular. The biggest reason they became popular for, average investors was because their values shot up massively. It became like a get-rich-quick scheme. That, of course, is not the option here at all.
So having said that, I think that the most reasonable apples-to-apple comparison would be to compare this to the crypto unregulated world of stablecoins. The other cryptos that you are referring to, which is, the likes of Bitcoin, Ethereum, which people would participate with a speculative intent, I think that completely is apples and oranges, cannot be compared. But you could compare it to stablecoins. Now that this stablecoin, which actually is a fair characterization of what the RBI is bringing, is actually backed by the RBI. Right? So I think that thereby, this is a big thing even when it compares to the stablecoin world of crypto.
All right. So now tell me how this is going to help RBI's cause in the context of what has happened with cryptos in India. The idea of CBDCs came because the Indian government and the RBI in particular was very clear. They didn't want other kinds of digital tokens to flourish here, so we'll get our own version. Is this going to just plug that loophole? Or is it really going to become something that companies will use, that people will use?
So here is the thing. I have heard since day one of the proposal for CBDC, as recently as yesterday's circular or announcement rather by the RBI, that they have mentioned that this will do away with the need of any other, what they call private cryptocurrencies. This bit is inexplicable. Because while if they had said this does away with the need of stable coins in the cryptocurrency world, I can see what they are talking about, right? Again, not 100% comparison, but at least you know what you're talking about. But almost everybody I know of, and I would dare say the number is more than 99%, who participate in the crypto world are doing it with an intent of the same thing as an investor. People don't participate in Indian rupee, at least at the retail level, as an investor. So that bit, frankly, I think is a little bit of, trying to get 2 birds with 1 stone, but that is not about to happen.
Well, it sounds interesting. It's a new start. Thank you so much, Ajit, for joining us and breaking it down for us. Digital rupee will be launched tomorrow. It's a first step. We'll see how far it will actually go.